Hello, and welcome back to the channel. I'm Algabot, and this is the place where we break down automated trading strategies for MetaTrader 5, one piece of logic at a time. Today we're examining an expert advisor called Vwap Pullback Engulfing. It's a session-based approach built around a single volume-weighted average price line and the classic engulfing candle pattern. Over the next few minutes you'll learn how it defines a trend, how it waits patiently for a pullback, and how it manages its stops and targets. Everything here is for education only. So settle in, and let's get started. So what exactly does this expert advisor do? At its heart, Vwap Pullback Engulfing is a trend continuation strategy. That means it isn't trying to catch tops or bottoms, and it isn't guessing where a reversal might happen. Instead, it waits for an existing intraday trend and then looks to join that trend on a pullback. The single tool it relies on is the session-anchored volume-weighted average price, which most traders simply call the VWAP. The VWAP is recalculated fresh at the start of each trading day, and it represents the average price weighted by traded volume since the session opened. Many institutions measure their fills against this line, which is part of why price so often reacts to it. The idea is straightforward. When price is trading above the VWAP, the strategy treats that line as a dynamic area of support, and it watches for pullbacks that dip into the line and then recover. When price is trading below the VWAP, the line is treated as dynamic resistance, and the strategy watches for rallies that push up into it and then fade. To confirm that the crowd has genuinely re-engaged with the trend, it requires an engulfing candle right at the line. No moving averages, no oscillators, no extra indicators. Just the VWAP and the raw shape of the candles. Because it works on freshly closed candles and holds only one position at a time, this is an approach that suits intraday traders who prefer clear, rule-based setups on a 5-minute to 15-minute chart. It's well suited to liquid markets such as major currency pairs or popular indices. As always, remember that trading carries real risk. Losses are a normal part of the process, and everything discussed here is educational information only, never a recommendation to trade. Let's walk through the exact logic, step by step. The expert advisor acts once per freshly closed candle, so it never reacts to the noise of a half-formed bar. On each new bar, it rebuilds the session VWAP by accumulating every candle from the day's opening through to the one that just closed, weighting each by its tick volume. It then waits for the VWAP to settle, by default requiring at least 10 session bars before it considers any setup. This stops it from acting on a thin, unreliable average early in the day. For a long setup, 3 things must line up. First, the strategy checks that the trend was already established on the bullish side by confirming that the candle a few bars back, 3 by default, closed above the VWAP. This proves we are looking at a pullback inside an uptrend rather than a fresh reversal. Second, the bar that just closed must have dipped down into the VWAP, with its low piercing the line, and then reclaimed it by closing back above. That tells us the line held as support. Third, that same bar must be a decisive bullish engulfing candle. The prior bar must be bearish, the current bar bullish, and the current body must fully engulf the previous body while being at least as large as a chosen ratio of it. When all 3 align, the EA enters a buy. The short setup is the exact mirror. The reference bar closed below the VWAP. The just closed bar rallied up to tag the line and then rejected it by closing back below, and that bar is a decisive bearish engulfing candle. When those conditions meet, the EA enters a sell. Risk management is structural and indicator-free. On a long, the stop is placed just beneath the low that the VWAP just defended, with a small buffer set as a percentage of the candle's range. On a short, it sits just above the defended high. The take profit is then projected as a fixed multiple of that stop distance, with a default reward to risk of 1.8. Only one position is held per magic number, so the bracket of stop and target manages every exit on its own. Here's the core of the strategy as it appears in MetaEditor. At the top are the inputs, mapped directly from the strategy's parameters. Min session bars is how many bars must form after the open before the VWAP is trusted. TrendLookback is how many bars back the close must already be on the trend side of the line. MinBodyRatio sets how decisive the engulfing candle must be. Stop buffer PCT controls how far beyond the candle extreme the stop sits. and RewardRisk sets the take profit as a multiple of the stop distance. Max spread points, lots and magic round out the configuration. Look at the long block. The Boolean bull engulf checks that the signal bar closed above its open, the prior bar closed below its open. The current body fully engulfs the prior body, and that body is at least the minimum ratio of the previous one. The if statement then adds the VWAP conditions. The reference close was above the VWAP, the bar reclaimed the VWAP, and its low had dipped into it. When all of that is true, the stop is set just under the candle's low, the take profit is projected at the reward to risk multiple, and trade.by sends the order. The short block is the mirror image. The Boolean bear engulf confirms a bearish engulfing pattern, and the if statement requires the reference close below the VWAP, a close back below the line, and a high that tagged it from beneath. The stop is placed just above the candle's high. The take profit is projected downward by the same reward to risk multiple, and trade.sell sends the order. Two clean, symmetrical blocks, and nothing else. Let's bring this to life on a chart. The smooth line winding through the candles is the session VWAP, and you'll see how price respects it on both sides. We'll follow a long trade first, then a short. On the left, price is trading comfortably above the VWAP line, pushing higher candle by candle. This is the established uptrend the strategy wants to see. The first couple of candles close well above the line, which sets the bullish backdrop. Then momentum cools, and a small bearish candle appears, pulling price back down toward the VWAP. This is the pullback the strategy is patient for. Notice it isn't a collapse, just a controlled dip back into the line that has been supporting price all session. Now watch the next candle, the one marked with the buy entry. Its low pierces down into the VWAP, testing whether the line still holds as support. Buyers step in right there, and the candle closes back above the line, completely engulfing the small bearish candle before it. That's the bullish engulfing reclaim the strategy requires, and because the trend was already established above the VWAP, the conditions all line up. The expert advisor opens a buy at the entry marker. The stop is tucked just below that defended low, while the take profit is projected upward at the reward to risk multiple, a default of 1.8 times the risk. From there, price does exactly what a continuation trade hopes for. The following candles push higher, each one building on the last, carrying price up and away from the VWAP. The move runs all the way to the take profit target, where the position closes for a completed long. One clean pullback, one confirmation, one managed exit. Now the character of the market changes. A large bearish candle breaks straight down through the VWAP, and price closes beneath the line for the first time. The regime has flipped. Where the VWAP was support, it now becomes resistance. Price drifts lower, establishing the below VWAP downtrend the short side needs. Then comes the rally. A bullish candle lifts price back up toward the VWAP from below, almost as if the market wants to retest the line it just lost. This is the mirror of the earlier pullback. The very next candle, marked with the sell entry, pushes its high up to tag the VWAP, gets rejected, and closes back below the line, fully engulfing the bullish candle before it. That's the decisive bearish engulfing rejection. With the downtrend already in place, the expert advisor opens a sell at the entry marker. The stop sits just above the defended high, and the take profit is projected downward by the same reward to risk multiple. Price then rolls over and follows through. Candle after candle prints lower, sliding away from the VWAP, until the move reaches the take profit target and the short closes. Two trades, both in the direction of the prevailing trend, both confirmed by an engulfing candle at the VWAP, and both managed by a structural stop and a fixed reward to risk target. That symmetry, long above the line and short below it, is the entire personality of this strategy. It doesn't predict, it reacts, and it only commits once the line has been tested and the candle has confirmed. And that brings us to the end of our breakdown of the Vwap Pullback Engulfing Expert Advisor. We covered how it anchors a fresh VWAP to each session, how it waits for a pullback into that line within an established trend, and how an engulfing candle confirms the entry, with structural stops and a fixed reward to risk target managing every exit. Remember, everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. Trading carries real risk, and losses are a normal part of it. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe so you don't miss what's coming. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.